please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, first up, let's take a look at the Asian markets. They opened lower on account of the news coming in from Trump's economic advisor, that is Gary Cohen's resignation. So the Japanese markets, though, however, have recovered from opening lows, and that can be something which we'll watch out for, given the sort of strength that we're seeing on the dollar yen as well. It's fallen below that 106 mark. So let's keep an eye out on that. The Japanese index, however, recovered about 0.25% from the low point of the day. The Korean markets, they're trading higher, perhaps something to do with North Korea deciding to denuclearize South Korea. So that index is up by about 0.3%, though a little off the high point of the day. The SGX Nifty should come up for you. For our own markets, yesterday, remember, we saw a cut of almost 100 points on the Nifty, much more from the high point of the day of yesterday's trading session. The SGX Nifty at the open was indicating a start at around 10,200. Now those losses have pared down to about 16 odd points, but that is something we'll definitely keep an eye out on all through today's trading session. The most important level will, of course, be the 200-day moving average that we'll watch out for on the downside. But South Korea, that one is claiming that North Korea is willing to hold talks with the United States and is even willing to give up on its nuclear program. According to South Korea, North Korea has also said that it will suspend its nuclear tests while those talks are underway. CNBC's Sherry Kang reports.
Last year, in November, North Korea was boasting the successful ICBM launch. And on January 1st, it feels like, okay, we need to help out with the South Korea's Winter Olympic Games. And this time around, they're fully ready to denuclearize. But I think, like I said, the detail is in the devil is in the detail. Things like we need to be guaranteed in terms of the regime in North Korea. We need to also feel like the military threats are not there anymore. So I think it's really North Korea trying to buy time here so that it can put on South Korea and the U.S. when it comes to when things don't go as well, what it can call a peace overture. And I think it's also important to point out here that it's really giving the governments in South Korea and the U.S. what they need. Inter-Korean summit, that's a win for Moon Jae-in. And denuclearization, or the willingness to denuclearize, and that's a win for Donald Trump. So I think it's being a very shrewd diplomat at this point. Guys?
Okay, meanwhile, U.S. President Donald Trump has responded to this on Twitter. He says, and I quote, "Possible progress being made in talks with North Korea. For the first time in many years, a serious effort is being made by all parties concerned. The world is watching and waiting. Maybe false hope, but the US is ready to go hard in either direction." End of tweet. Well, let's see what happened on the Wall Street yesterday. Well, the U.S. markets closed higher in overnight trade, but remained on edge over an ongoing debate over tariffs proposed by President Donald Trump. CNBC's Hampton Pearson gets us wrap of all the action on Wall Street.
We had mixed signals, but a little less anxiety about a trade war, producing a positive close for the major averages, with the Dow closing in positive territory just in the last half hour of the trading session. Investors took some relief when congressional leaders urged President Trump to moderate any plans for trade tariffs, starting with steel and aluminum. Leading the charge on Capitol Hill, House Speaker Paul Ryan.
There is clearly abuse occurring. Clearly, there is overcapacity, dumping, and transshipping of steel and aluminum by some countries, particularly China. But I think the smarter way to go is to make it more surgical and more targeted.
The other international story of interest to the markets reports North Korea is willing, perhaps, to hold talks with the U.S. on denuclearization. At the closing bell on Tuesday, the Dow adding just 9 points, the S&P up 7, the NASDAQ higher by 41. Among the market movers, most of the S&P's 11 sectors rose, with the materials index leading the way, up 1.3%. Utilities was the weakest sector, with a 1% drop. Among the bigger movers, shares in Target down 4.7% after the big box retailer reported lower than expected profit for the holiday quarter. Qualcomm dropping 4.5% after a U.S. government national security panel said it identified potential risk that might warrant a full investigation of Broadcom's $117 billion bid for that chip maker.
All right, that was as far as the markets were concerned yesterday. However, post-markets, the US stock index futures pointed to a sharply lower open after the news that White House Chief Economic Advisor Gary Cohen has resigned. Cohen, remember, from a former Goldman Sachs president and COO, was seen as supporting more business-friendly policies, especially in the wake of Donald Trump's surprise announcement of tariffs on steel and aluminum imports. Dow futures now down over 315 points, while the S&P futures too indicate a decline of more than 1%. So that is something we'll be watching out for all through today's trading session, and also in the evening how they open.
Well, right, certainly that remains a big cue for the day. But in a CNBC exclusive, CNBC's Steve Leisman caught up with Dallas Fed President Robert Kaplan and began by asking him about how he views Trump's decision to impose steel and aluminum tariffs on Canada and Mexico.
Our trading relationship with Mexico and Canada is critical to U.S. competitiveness and U.S. jobs. So I don't want to jump to what might actually happen, what might be implemented, but I would say it might be wise just to wait a little bit and see how this unfolds. I'm concerned we're in the middle of a trade negotiation with both countries. This could have some chilling effect. But it's so clearly in the interest of the United States to have strong trading relationships with both those countries. I'd be optimistic about how this actually gets implemented.
Since you've had a chance to update your forecast formally,
right,
the threat of tariffs, which could be a negative for the economy, better economic growth, better global growth, how do you put that all into the pot and give me your sense of economic growth in the United States right now?
So the trade discussion at this point probably won't change my economic forecast because, as I've said to you on other issues before, let's see what's actually implemented. It may be different than is being discussed right now. On the tax legislation, what I've also said is it has caused us to mark up our 2018 growth forecast, and for 19 and 20 to a lesser extent. My concern is this: there are elements of this recent legislation that will actually improve sustainable growth in the United States. But the elements of the recent bill and also this budget agreement, actually I'm concerned will actually turn out to be a stimulus funded by increasing the debt, which will give us a bump in 18, less so in 19 and 20, and we're going to return back down to trend growth, except we're going to be more highly leveraged. I think that leverage at the government level and the future path of debt could become a headwind for economic growth in the United States. It certainly makes us a lot more interest rate sensitive, which is a vulnerability we're creating.
All right, then moving across the Atlantic in European indices, the markets closed with slight gains as investors appear to shrug off concerns of a potential trade war and uncertainty following Italy's election result. In fact, the Italian markets, they rebounded hard with a gain of about 1.75%, really outperforming the other European indices as markets still await clarity on which parties are going to form the next government. That political gridlock continues in Italy following the inconclusive vote over the weekend. Emerging markets, we saw mild gains come by in the Russian index, and the Brazilian index too should come up for you as we speak, and that one saw a cut of about 0.4%. However, no real cues coming in from the European region barring Italy. The big news, of course, was post-markets, a US closure of the resignation of Gary Cohen.
Okay, let's take a look at how it impacted the currency space then. The dollar slumps in trade after news of Gary Cohen, a key advocate for free trade in the White House, announced his resignation, fanning fears of a trade war.
From the precious metal space, gold prices gained more than 1% as the US dollar slid after North Korea signaled that it is open to nuclear talks and investors worried about aggressive US trade policy.
And in the world of commodities, crude oil gained overnight, supported by a weaker dollar, but NYMEX gains were limited by forecasts for a weekly rise in US crude stockpiles. Okay, talking about the forecast for oil, the global oil sector needs $20 trillion investments over 25 years. That's the word coming in from Saudi Aramco CEO Amin Nasser. In an exclusive with CNBC's Brian Sullivan, he says the company is planning to expand in the US and was confident that oil market fundamentals and future demand growth would be healthy.
We do have plans for expansions in the US. we heard about the tariffs, and we still are planning to proceed with the feasibility study of this investment for our Port Arthur refinery. We're talking about an expansion program that hopefully proceeding very well.
It's a very interesting time, I think you would agree, because you're talking about expanding and you're investing in the United States at a time when the U.S. shale boom is, as the IEA said, booming, 10.2 million barrels a day. Do you view yourself as a competitor to the U.S. shale industry?
I think the shale industry did a great job, in terms of increasing supply. There is talk about additional capacity that will come from the shale this year of about 1.2 million barrels. But if you look at the forecast of additional demand between IEA and EIA, we're talking about 1.4 to 1.7 million barrels of additional capacity demand potential in 2018. If you add to it the national decline that is happening in existing fields, which is about 2.5 to 3%, so we're talking about between additional demand and natural decline, there is a need for 4 to 5 million barrels of additional supply. So the shale is adding, but it's not impacting the total supply requirement.
All right, let's just take a look at the Asian markets. There seems to be a recovery underway as we speak. In fact, the Nikkei is almost broken into the green as we speak, and that is a recovery. In fact, it has just broken into the green, and that's a recovery of almost 1% from the low point of the day. The Korean markets too, while dilly-dallying a bit, opened in the green, then moved to the low point of the day when we checked it, and now it's moved back again to the higher end of today's trading range with a gain of about 0.6%. What does this mean for our markets? Well, the SGX Nifty at one point it was down by almost 173, 174 points. It has recovered all of those losses. In fact, it was indicating a start below that 10,200 mark for our markets, and now just about flat terrain is what we're witnessing for the SGX Nifty. In fact, what we'll do is take a short break, come back, we'll carry this discussion forward and get you all the cues and news you need to know for trade this morning. Stay with us.
Well, back home on the Wall Street, the market witnessed strong selling pressure in the last hour of trade. The Nifty closed at its lowest point in 2018 and reached that 10,250 mark. The Sensex too ended with cuts of more than 425 points. Mid-caps, however, managed to hold on to that 19,000 mark, while the banks underperformed with cuts of 1.5%. But that was about yesterday. For today, the key headline remains the resignation of the White House Chief Economic Advisor Gary Cohen. To discuss that and all the other cues, Naveen Shetty joins us now with the cues lined up for the day. Naveen, good morning. Over to you.
Good morning, Anisha. As you clearly pointed out, the global cues, they seems to be a bit lackluster. Given the resignation of the economic advisor to Trump, the Dow futures, they had fallen almost 1.5%, but that seems to have recovered, and the cut seems to be around that 1% mark currently for Dow's futures. On the other hand, clear above been seen in the SGX Nifty. Also, the SGX Nifty has recovered and has been almost flattish around the 10,240 levels. On the other hand, Nikkei has been down almost 0.5%, as well as the European indices yesterday. They have been showing a more or less flattish end. Talking about yesterday's say, that seems to be important given the fact that we saw sell-off in the last hour of trade, and the volumes, the F&O volumes were almost 7 lakh crore rupees, in fact more than that. So in the beginning of the series, seeing a cut around in such a huge level, that seems to be a bit of a dampener for the overall markets. On the other hand, if you see the institutional activity, yesterday there was a flip. The DIs in fact sold off close to 740 crore, and the FIIs, they bought in close to 620 crores. For the last 3 sessions that we have had in the month of March, FIIs have brought close to 495 crores, while DIs, they have sold close to 890 crores. Interestingly, the last time in the whole of month this had happened was in March, way back in March 2017, exactly a year earlier. So a year earlier, the FIIs have bought close to 2,700 crore in March 2017, the whole of the month. Meanwhile, the DIs had sold close to 4,400 crores. So that is an important point to note out for this month also. On the other hand, the Nifty futures, they have been seeing a steep deterioration from the 7 rupee premium that we had seen day before yesterday. Yesterday, the premium almost went flattish. Also, the key level to watch out for on the downside side will be the support at the 200-day moving, the 100-day moving average around the 10,127 level. Keep an eye on that in case we see a fall exaggerating from here on. Back to you.
All right, Naveen, thanks a lot for that. We'll keep an eye out on that. But what are the stocks you're going to watch for in trade today?
Well, quite a few big stocks, Mangalam. I'll begin with Infosys. They open an Indianapolis technologies as well as an innovation hub, a kind of an extension for the company. On the other hand, TCS also, the other IT major, they have extended their partnership, strategic partnership with Virgin Atlantic. On the other hand, GMR Infra will be in focus. Their Delhi flagship, Delhi Airport, that has received the #1 position, the highest category in terms of the airport services. Also, AU Small Finance Bank has tied up with Orient Pro Solutions to enhance their digital banking. Not a very impactful event in terms of the financial numbers, but nevertheless a strategic move. Canfin Homes, remember, Abhishek has been enlightening us with the updates on this stock, but now we understand that the officials of Baring PE and the representative of Ernst & Young, they have met the officials of the company to understand the business, basically. One more stock that will be in focus is Sangvi Brands. We don't talk about this much, but board has met to discuss the proposal of mergers and acquisition with a suitable company. Ultratech Cement, the FPI limit has been raised to 40% of the paid-up capital. On the other hand, Dilip Bilkon, some order win again for the company, wins orders from NHAI worth 900 crores. REC also, there has been a bit of a restructuring that the company has been looking into. So transfer of one of their transmission business into and wholly owned subsidiary of Power Grid. On the other hand, specialty restaurants, two new restaurants have been opened by the company, that is Zoodles as well as Sweet Bengal. Tata Motors is one stock, some SEBI probe on that. Meanwhile, Ashoka Buildcon, again, an order win for this company also, emerges as the lowest bidder for 3 NHAI projects. Meanwhile, Lumax Auto, the board will be considering equity of shares quite soon. Back to you. So all these stocks will be in focus in today's trade.
Okay, Naveen, thank you so much for that. So a lot of infra companies winning orders in the last month of their financial year. But it's time now for a quick break. Up next, the insolvency and bankruptcy code may be soon seeing some significant changes. We get you the details on the other side of this very short break. Stay tuned.